You are welcome to Forex Trading, your last stop in trading education. Today we'll be going into lesson 2 of our training. And today we are going to be considering what a trading object in the Forex market is. What do we do in the Forex market? We trade money. It is as simple as that. We trade the currency of one country against another. Every country in the world has her own currency. So when we trade one against the other, that is what we do in the Forex market. And usually, these currencies are traded in pairs. For instance, when we trade the GBP, the Great British Pounds, against the US dollar, that is United States dollar, we are in the Forex market. So in the Forex market, we can also trade the euro against the USD, euros against the Canadian dollar, and all of that. So the currencies are usually traded in pairs, just two countries' currency against each other. Let us look at the chart as an example. So in a place like this, you see Euro USD. This is Euro USD. When you look at this, the top left-hand corner of the chart, you can see it written there, Euro USD. You don't need to memorize these currency pairs. With time, it will become part of you. If you don't know the name of the currency pairs, just put your mouse on it. That is if you are using MetaTrader 5. That is what I am using for this training. If you put your mouse on it, you are going to see Euro versus US dollar. If you click on another thing, let's say you don't know USD CNH, if you put your mouse on it, you are going to see US dollar versus Chinese yuan. So that is what we trade in the Forex market. The currency, the trade money, and the currencies are traded in pairs. The next one, we'll look at how are currencies traded in the Forex market. Let us take, for instance, GBP USD. If GBP USD is currently trading at 1.3460, it means that £1 is equivalent to $1.346. So when you see a quote like this, GBP USD equal to 1.3460, we call it currency quote. That is currency quote for you. So maybe if you are reading any book and you see a thing like this, GBP USD equal to 1.3460, or any other prevailing price, exchange rate, we call this currency quote. Let us look at it now. Presently, this is this is GBP USD. The line you see here is the current price, the international price for GBP USD, or rather the exchange rate for GBP USD. It means that £1, the first currency that you see, is usually considered one. And then the quote you are seeing on the chart, the price you see here, that is the rate. Or if you want to see it bigger, you just click, you can click new order. We are not placing any trade now, and then you can see it clearly here. This is 1.3511, 1.35, yes, 11. This is if you want to, we are going to get to this. If you want to buy, you use the price by the right hand side, and if you want to sell, you use the price by the left hand side. That is, if you want to use what we call instant execution, or market execution. So we are going to get to that later. So that is currency code USD Let me enlarge this. So if you want to see the current price, this is the current price in the international market. So the next one is it is as simple as that. That is currency code. Like currency code, yes. Let's say the next one. Then we have what we call major currencies. In the forex market, there are currencies that are referred to as major currencies. You need to know them. You don't have to cram anything. Though for you to become a successful trader, you don't need to know whether a currency is major currencies or the pairs are crosses or exotic. We're going to be looking into that. You don't need all of that. But what you do need to know is that the major currencies give us more profit when you are in the right direction of the market. And of course, more losses when you are in the wrong direction of the market. So when you are trading major pairs, USD, Euro USD against the US dollar, GBP, CAD, USD JPY, and all of that, you'll be expecting more profit if you're in tune or in the direction of the market than if you are trading crosses or exotic. We are going to know what is crosses later. So the major currencies include the US dollar, the euro, the GBP, that's Great British Pound, the CAD, Canadian dollar, JPY, AUD, Australian dollar, and the New Zealand dollar. So these are the major pairs. I hope I am not too fast. And then we are going to be talking about kinds of pairs. Kinds of pairs. We have major pairs, crosses, exotic. What we have here is major currencies, please. There is difference between major currencies and major pairs. Major currencies, we are talking about the currency of a particular nation, of strong economies. They are major pairs, which is what you have: the euro, the dollar, the US dollar, the GBP, the CAD, Japanese yen. They are major currencies. They are doing very well. Their volume in the market is much. So they are considered as major currencies. Then now we have pairs because we trade forex. Forex is traded in pairs. We have major pairs, crosses, exotic. The exotic pairs. What are the differences between them? See, when you are trading one major currency against another major currency, we call such pair major pairs. We call them major pairs. In the forex market, the USD with another major currency, that is major pairs. Sorry, it has to be traded against the US dollar. Please let me put that straight. The major pairs have a strong pair or a major currency traded against the US dollar is a major pair. So it has to be traded against the US dollar. Forex crosses. Forex crosses are a combination of two major pairs apart from US dollar. So when you trade one major pair against another major pair, that is Forex crosses. As I mentioned before, we are not too concerned whether you are trading major currency, major pair, Forex crosses, or exotic pairs. It is not our business. What we want to teach you is what works for any currency combination, and it goes beyond Forex. The techniques we'll be bringing your way includes the techniques work for any financial instrument. It works, or they work in any time frame. You don't have to check one time frame and then go to another time frame, top down analysis. You don't need all that. You can do that. We are not against it, but just apply our own principle, apply our own techniques, and make profit for yourself and enjoy trading. You are not only going to make profit, you are going to enjoy trading in the forex market. You are going to enjoy trading metals, equity, whatever financial instruments, stocks. Our techniques are applicable across border in the financial market. Now we talk of exotic pairs. There are currencies that are economies that are emerging. So emerging economies currency with US dollar and occasionally with other majors, or emerging economies with emerging economies. When you pair them, you get what they call exotic pairs. Yes, they are exotic pairs. So you can trade them. The techniques are robust enough to handle any pair and any financial instrument, any time frame, even to 1 minute time frame. It is that serious. They are that powerful. The techniques will help to keep you out of ranging markets and help you to enter the market when the market is ready. We also have techniques for trading in the rough markets, in the sideways markets. We have them. So follow us and equip yourself for successful journey in the financial market, especially in the forex market. The techniques, you ask me that, what about cryptocurrency? The techniques are all they are all encompassing. They work for cryptocurrency, any financial instrument, for futures, whatever. Follow us and make good profit for yourself. Now, quickly, uh, let me introduce a concept to you. We have bid and ask. What is bid and ask? Bid is bid. Bid is when you are selling. You, as the trader, you are selling. That is, you are bidding. And when you are buying, we call it ask. You are asking. Just as I said, you don't have to bother yourself. Just understand some things. Initially, as simple as this is, I used to be confused. What is bid? Because like bid on your own side, while it is selling, on the broker side or on the other side, it is buying. While ask on your side is when you are buying, whereas while on the other side, that is the other trader that is buying from you is bidding. So on your side, it is asking. On the side of the other person, it is bidding. So I used to be confused initially when I just started trading. But nevertheless, that doesn't stop you, whether you understand the concept or not, it doesn't stop you from making money. Yes, when we click a new order, what you have on the right hand side, I know those days I used to know that, okay, this is buying. The options are very clear. Where you buy is very clear. The right hand side is for buying, the left hand side is for selling. So the right hand side is ask, the left hand side is bid. You don't need to be confused. For as simple as the concept is, It was confusing me for years, but it didn't stop me from profitable trading. So you don't have to really bother, but just know it. So some of the things we are going to be bringing your way is for you to have sound knowledge of what the market is as much as possible. But there you are going to see differences in our approach of trading. So you have the general knowledge, and then we are going to move you deeper from the general knowledge to specific knowledge, to access that is you need to actually trade profitably. So our closing promise again: if you are serious about becoming the trader you've always wanted to be, subscribe now if you have not done so. Oracle's trading isn't about hype. It is about truth, discipline, and results. We want you to be successful in trading. Not only successful, we want you to enjoy trading. So subscribe now, like our videos, share them to those that you love, to struggling traders, and let us all together enjoy trading and become successful according to our dreams. Thank you.